What if I told you the biggest Bitcoin heist in history isn't coming from hacks or scams, but from the most powerful people in finance? While everyone is distracted by inflation and rate cuts, Wall Street has been quietly accumulating staggering amounts of Bitcoin.
IBIT is now over $100 billion.
$100 billion, I know, from nothing not that long ago.
And 2 years ago, zero.
Yeah.
Bitcoin that may never return to circulation, right behind our backs. Stay tuned because in this episode, we're breaking down exactly how this is happening, who is behind it, and why it might be the most permanent supply shock Bitcoin has ever seen. BlackRock wants your Bitcoin. JP Morgan wants your Bitcoin. And yes, Bank of America now wants your Bitcoin too. But this time, it's not just another bullish adoption story. This is about control and what happens when the system Bitcoin rebelled against becomes the new custodian. Quantitative tightening, where they take dollars out of circulation, is coming to an end. Quantitative easing, where they flood the market with dollars, aka the money printer, is next. Right, Neil?
Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
Inflation is still hovering well past the Fed's goal of 2%. And when prices rise faster than wages, people stop spending, which slows the economy down. When the economy slows, the Fed reaches for the same old tool. They turn the money printer back on. Add the government shutdown on top of that, and we have a recipe for an almost certain round of emergency money printing and renewed quantitative easing. When that happens, the people who already have assets, Bitcoin, win. Everyone else, unfortunately, gets diluted. Wall Street knows this. That's why you're seeing it now. Bitcoin ETFs sucking up supply, banks accepting Bitcoin as collateral, and traditional finance turning orange, not because they believe, but because they're trying to keep their heads above water. Don't forget, BlackRock's IBIT ETF has been their best performing product, and now that they got a taste of Bitcoin's potential upside, they want more. Bloomberg just reported that Bitcoin whales have moved billions into BlackRock's IBIT ETFs, literally migrating coins from self-custody into Wall Street vaults. At the same time, Bank of America and JP Morgan are suddenly cool with Bitcoin-backed loans. Funny timing, right?
I never liked him. I never trusted him.
QT ends, liquidity dries up, and suddenly the banks that caused the last crisis seem desperate for real Bitcoin while they sell you paper Bitcoin. It's almost like they don't want to earn it, but they want to own it anyway.
The Bitcoin Treasury company idea and the most elegant business model is, I have a stack of Bitcoin, $10 million of Bitcoin. I start issuing equity based upon my ability to acquire more Bitcoin. Then I issue credit, fixed credit, convertible credit, some other credit, and then I use it to buy Bitcoin. And of course, the point is, when Metaplanet was a hotel, they might be able to buy $1 million of Bitcoin a year. But when Metaplanet started issuing equity, it's able to issue $1 billion of equity in a year. And so now they're buying not 1 million, but 1 billion a year. But the rate at which a company can issue equity or credit is exponential, but it's not like annual. You might be doubling every month, right? You might go into something like on October 30th, we announced a $21 billion ATM. We thought, well, if we do that in 3 years, that'll be the most successful equity program in the history of the capital markets, if we did it in 3 years. And we did it in like 3 months. Because all you're doing is you're swapping equity for Bitcoin, and you're swapping credit for Bitcoin. Companies can do that. Individuals can't do that, but when you put 3 individuals together and they cooperate, they become a company. So really, I wouldn't be afraid of a company. I would just say a company is when, one dude that knows finance got together with one lawyer and got together with one leader, a CEO, a CFO, a general counsel. Now you have a Bitcoin treasury company. If you put Bitcoin digital capital behind it, and now you can grow literally as fast as you can issue the security and buy the Bitcoin. And that is an investment cycle which is 1,000 times faster than, a physical real estate cycle or a business cycle.
Michael Saylor showed the world how to leverage dying fiat to accumulate Bitcoin. Strategy now holds about 3% of all Bitcoin in existence, actually. But the difference is Saylor did it to escape the system and save his company. Wall Street is doing it to rebuild the system that ruined money in the first place, all on top of your Bitcoin.
That's not what I had in mind.
Here is how they do it. They lend you fiat against your Bitcoin, they rehypothecate that collateral behind the scenes, and then they profit off of the spread while you take the risk. It's the same fractional reserve game, just with an orange wrapper. Now, let me be clear, not all Bitcoin-backed lending is bad.
Message!
Companies like Ledn, for example, have proven that lending can work if it's transparent, proof of reserves verified, and built around protecting your Bitcoin. The difference isn't the practice, it's the counterparty. You can borrow responsibly without giving your Bitcoin to the same people who caused literally every financial crisis for the last century. The who really matters in this scenario. And speaking of building Bitcoin independence, if you don't want to rely on banks or intermediaries, you can mine your own Bitcoin with Sazmining. It's one of the easiest ways to earn Bitcoin directly and secure the network. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's mining as a service that actually puts Bitcoiners first. You can own a state-of-the-art mining rig, plug into affordable carbon-free energy, and stack Bitcoin just like Satoshi. No middlemen, no markups, and no worries. Saz doesn't tack on extra fees when you sign up, and unlike other companies, there are no rig upcharges or inflated power rates. Their entire business model is based on a clean and simple revenue share. They only earn Bitcoin if you are too. A total alignment of incentives and 100% Bitcoiner values. While some claim simplicity, Sazmining proves it. Let's just say if you need a compass to find your miners, you're not in the right place. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing. Right now, ETFs hold over 1.1 million Bitcoin. That's about 5% of the total supply. And the rate of accumulation is accelerating. According to a report on Bloomberg, however, these inflows aren't retail. They're whales, family offices, early adopters, old money institutions, moving real coins off self-custody and into the custody of BlackRock, Fidelity, and State Street. It's being framed as maturity, but let's call it what it is. It's consolidation.
That's not what I had in mind.
We've seen this movie before in 1971 with the 6102 order that allowed the US government to take physical gold away from regular citizens, making them the entity with the most amount of gold today. Gold ETFs promised easy access, and within a decade, Wall Street owned most of the world's gold. The same banks that printed the money took control of the hard asset behind the money. If we let it happen again with Bitcoin, the entire point of this revolution, sovereignty, separation of money and state, gets absorbed back into the machine.
If you look at the future, where is this going? No central bank wants Bitcoin to be successful. Not a one of them. The quintillion nipple suckers, whether it's Nancy, whether it's Jamie Dimon, whoever these people are that are close to the money source, the money printer, the actual money spigot. Find one of them that is going to want to break his rice bowl or her rice bowl. They don't exist. We are in this alone. This is a battle. Bitcoiners, and there aren't many of us. You'll see a statistic come out that says there's 200 million crypto holders, in like say North America. There aren't that many. There are not many Bitcoin maxis. The people that just hold Bitcoin, understand Bitcoin, keep it in cold storage, get it off these fucking exchanges. Don't believe in the Treasury companies, although I will tell you I'm an investor in MicroStrategy and MetaPlanet, but nonetheless, they don't mean anything to me. Jack squat. I'd sell them so fast it'd make your head spin if I had to. It's Bitcoin, and it's Bitcoin in cold storage. It's the only thing that you can count on. That is your escape. These people do not like us. They don't want us to succeed. The only reason that we are seeing the corporate adoption that we're having right now, the ETFs, even the Bitcoin Treasury companies, is there's money there. It's fiat dollars for them. Do you think those ETFs, do you think that Larry Fink really believes in Bitcoin? Larry Fink not long ago said that he was having a conversation with a sovereign wealth fund, and they were asking him, should we allocate 3 or 5%? He's having those kinds of conversations with people. He's having conversations where he talked about a debasement trade 6 months ago. And he said, if you believed in that trade, and if other nations follow these sovereign wealth funds, you're going to have up to a $700,000 Bitcoin soon. These people don't want Bitcoin to succeed, and they're going to try to build the rails they can to contain it, whether it's through stable coins, whether it's through some kind of rails on FinCEN, whether they're going to go and make a call to Foundry mining pool. Whether they're going to talk to, I could go down so many rabbit holes here. But the bottom line is that it's just us, kids. It's just us. We got to realize that, we have this special, for the people that are here now, we have got a special gift that we've worked hard to acquire, and nobody else really gets it. And you can prove that. You just go around and start asking people about Bitcoin. You're never going to find anybody that has a conversation like we're having right here. When I talk to the plebs that are listening or watching right now, and I talk to them about cold storage, they know what I'm saying. They understand what a seed phrase is. They know what the exchanges are. They know what the risks are. Why? Because they are one of the few. And lonely are the brave, my friend.
Now, here's where it gets real. People are really feeling the squeeze. Prices are high, liquidity is low, and holding Bitcoin long-term takes a lot of discipline. So the temptation hits. Maybe sell a little, maybe loan some out, maybe move it into an ETF so it earns yield. But here's the truth. Every sat you hand over right now to the Jamie Dimons and the Larry Finks of the world becomes a sat the banks will probably never give back. They've already proven they'll print infinite dollars to stay solvent.
An infinite amount of cash at the Federal Reserve.
What they can't print is more Bitcoin. That's why they want yours. So yes, borrow if you must, get liquidity when you need it, stay solvent, but never forget who you're giving your Bitcoin to. Because holding Bitcoin isn't just holding money, it's holding power.
He who has the Bitcoin makes the laws, Rand. We're not going to just sit around and let the goddamn congressman tell us what to do. We've got the capital. We make the laws. We've got the Bitcoin. They don't. We got it. They don't.
And before we wrap, Mining Disrupt 2025 is around the corner and you don't want to miss it. The biggest Bitcoin mining event of the year is taking over Dallas, Texas, November 11th through the 13th. This may be the most important Bitcoin mining event in history. The biggest names in the industry, cutting-edge rigs, Bitcoin and AI integration, the signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. We are living through the Trojan horse, and then they fight us phase of Bitcoin adoption. Wall Street wrapping ETFs in shiny orange packaging. And every time someone moves their Bitcoin into their custody, it strengthens the very system we're supposed to be replacing.
You weren't supposed to do that.
So stack with intention, borrow responsibly, and for as long as you can, hold your own keys. Because this time, if we give it all back to the banks, there won't be a second revolution. That's it for my show today. Thanks for watching Simply Bitcoin's Satoshi. Don't forget to smash the like button, share the show with your friends, drop us a comment down below. I read all of them. And let us know what you think about our new studio. As always, stack, slay, and stay bullish, baby.